This is Justin on Tuesday, November 15th, 2022. Taking a look at SPX on the 3 minute. So I put this on the thumbnail for yesterday's video. And the main focus of this, the main point I was trying to make was the fact that we made this really nice double top here and then broke down, retested, and ran lower and talked through, shorting here, all that kind of stuff. Okay, so I'm going to back this up and we're just going to move this line. So this was based on the high from Friday and how to trade it Monday. And then look at this, the high from today. We had something really similar happen where we've got a really messy double top, but it's still kind of, you could say it's like that. It's more of just this triangle. Actually started to break down here. We got the same kind of breakdown retest into that level, and then this one just collapsed. But it's very extremely similar to what I talked through yesterday. I wasn't ready for this to sell off. We got some retesting. This itself was a retest, and then it gave you some more bull candles closing below the 10 with the 10 EMA setups yesterday. Didn't get that today at all. Even just the way this rallied here. Actually, I can just go on today's video or today's candle. Actually, the one last thing I want to point out is we actually made a move below yesterday's low. That was at this point a bear trap, and then the bulls came in and pushed this thing back up. We retested back down almost, pretty much to the closing price of yesterday, and then just chopped. But what would have made this a little bit better, actually a lot better, because it would have been a great opportunity if that candle was bullish. Such a small candle, but you could really have just traded, a break below here or a break below here, about the same, and then your stop somewhere up here. But as a 10 EMA setup, this is not a bull candle closing below the 10, but it really should be, right? Like, because we missed out on that if you're just using 10 EMA. So another way to trade this would be to see, okay, what level here are we? Hang on, I'm trying to clear it. I just lost the tool. There we go. And clear. So one thing we can do is look at some levels here. We can look at breaking below these candles, we can go and see what were the options doing in here, where we're already kind of breaking down, this portion of the move was already breaking down back down below yesterday's high. I know it seems confusing. That's the only thing that connects it to yesterday, but it's more likely to have this just be lower highs all day until you get to this point of the day. Well, actually, no, technically we made lower highs all day. That's beside the point. But then you had this is a low, and then it held and it held. Then we broke down, and that's kind of your first signal. And then we started to hold that low again, kind of break down a little bit. It's like, is this just going to get bought back up? No. Is this going to get bought back up? No, that actually just completely collapsed. So anticipating that, a triangle shape like this is going to break down, what could you be doing? You can be looking at calls. No, puts. Let's go look at puts. So this is the 39.50 put that expired today. It was next to nothing. Like, just like I talked about in the video yesterday, buying at 0.3, spending $30. Like, you could have done that here. The low is 0.25. At this point, it wasn't breaking down yet. So this would have been completely speculative to buy this at some value below $1, below 0.5, somewhere around there. And then just hold on into yesterday's low, which would have been probably around 11 or 12, somewhere in here. And that would have been a completely speculative play. Another way to do this is if we go into an option that's a little closer, maybe the 39.75, and let's see what that's doing. It's easier to see these candles if I zoom in on just this portion of the day. So again, we're anticipating that something's going to happen. That's way too much. I don't want to see all of that yet. Well, I guess I kind of have to. So when this is going sideways through here, well, I guess it's kind of still choppy. So all of this, you're anticipating that you're going to see a move that's going to break down on the SPX and break out on this put option. And so a couple ways to do that is just looking for a a really strong candle, a really clear candle to get past. So that's like this one, that aligns with the high there. So that would have been buying on a breakout like 280, but then your stop really still needs to be down here. So then you're like 280 by maybe 120. So that's $1.60. So that's too much. You'd have to go back out a little further. Or if there's other things like here's some other wicks here, maybe we can get that a little tighter. Again, if that candle was bearish, this would have been great. But even trading that candle, I mean, there's a number of different ways to do this. What I really like is this being a hammer candle here and a move past that. So that's buying at 180 and a stop down at 1.2. So that's another way to do this. So there's a whole bunch of different ways. And then there's the way this looks on different options. So you really need to find what works for you, for your system. The other thing, just looking at this, I'm noticing is the volume. So let me draw again. Yeah, so this candle has significant volume. You see this volume spike right here, similar to this volume, not quite as high. You have a little more volume coming in here with a bounce. Anytime you're just buying down here, it's just a blind buy. It's something you're doing with absolute zero. So if you're doing a $100 risk, then you're beyond that at this point because you're going to be buying like maybe 140. You're on the 140 price. And you're going to look to just, have a good move. And in this case, it was a great move. And in order to hold through into yesterday's low, would have been, all the way down here. At that point, the 39.75 is about 20, nearly 20 points in the money, at which point, it should be past 20 here because it still has some time left on the day. So selling somewhere in the 20s would have actually worked. In this case, let's just for round numbers say you bought at 2 and it stopped down at 1, and that's a 10x if you got out at 20. So you 10x the trade. If you've done that with a $100 risk, so buying at 2, stop at 1, and held on to 20, 20 minus 2 is 18. That's an 18R trade because it's $100 risk. So it's 18 divided by 1 is still 18. So I skipped that part, but that's how to get the R, the R gains. So that's just if it hit 20 and it still went past that. So anyway, there's a number of things going on here. Looking at the call, here's the 4,000 strike call. You can see that we're still making these lower highs here. So all through here, we're making lower highs. We were starting to make these lower lows because we're just losing premium. And you had this same kind of consolidation here where this is getting tighter here. And here's that low. And it just didn't retrace back up as much this time, so this is a much smaller retracement compared to, this one and this one. And so those are also signals with how the option's moving that, okay, if we actually start to get really tight in here, this thing could sink. You would still expect it to retest. I was still expecting to retest just like it did yesterday. Didn't get that retest, didn't know we weren't going to get that retest. And really it's a matter of how do you play it in either way. How do you play a breakdown where it's starting to break down here? The way you can do it with more confidence is going with a setup where you're getting below, you're getting in as it's passing through a place that is breaking down. So here's your breakdown, you're getting in, on this candle, you've got it set up, anticipating that's where it's going to go. Same with this one, gave you another opportunity to short it here when it retested. This one didn't give us an opportunity to retest. I think if you would try to get in here and then it retests, sure, that could have worked. But why there? What is so key about that position or that location? I don't think there's much significance to it because we bounced there before and we're not taking it out here. So, maybe that's the only thing is, we did take it out here, but then we immediately recovered. So it's easy to see, even between these two, we broke down through that and then we pushed back up quite a bit. We broke down through that and then we didn't push up as much, but you're anticipating that it's going to not do this and it's going to roll over. If you had done that here, it didn't work. So this didn't work on that breakdown. This one did. So, the difference there is just you had more consolidation, and it was later, a little later in the day, after making more of this pattern. Earlier on, this is more of just like a multi-top. It's kind of like a triple top. There is some consolidation here, and some people may have been thinking, oh, it's a triangle here. I do like the fact that we were kind of channeling within the opening candle. That really showed that we did not have very much bull strength going in today. We had a really nice bullish gap and go, or almost, it almost cleared the high. It opened above the body of yesterday's candle. This was a really nice inverted hammer. But we've done this before where we've had this kind of hammer then, or inverted hammer then gapped up. I'm trying to think of when. Here's one where we had something that gapped up that ended up selling off. Here's one that's similar where we actually turned into a bull candle. This was when we were on our way up into the 200. Looking for a bearish one that stayed higher, or maybe it was engulfing. Today was in a bear engulfing candle from high to low. The body just doesn't look like that. So my eyes aren't catching any right now, just scrolling back in time. If you find one that looks similar to what we did today, put that in the comments and let me know what you find. But let me go back to where we are today. So, we've kind of played this out with the bigger picture here. We've got this retest of inverted head and shoulders, and we're just continuing to move on up. I think it's pretty likely we could. The last time I said which direction something's going to go, went the complete opposite direction. So it seems like we're pretty likely to come back up here into the 200, get back into these levels, and I'll scroll again. We're from some of the key prices, the key candles over here. I don't remember why I have that one, because that looks like it's the middle of the candle. I don't remember why I have that one. That's going back to 9.9. Let me look at 9.9 real quick. I have been printing these out for a while, just to go through and have them handy with how did something move. That wasn't super significant. There was a day that had the exact same hammer on the 3 minute twice, basically, and bounced both times. Right at about 40.47, maybe. I'm not sure why that's so significant midday. So maybe we can discount that one a little bit. I'll leave it out here. We may need to zoom back in. Actually, I don't think I can go that far back in the 3 minute. I may have to go back in the 5 minute to see. Yeah, 3 minute only goes back 30 days. We're well past that. So I can look back at a 5 minute, figure out if that's really relevant. But there's some key levels up here. The main ones being this Marbozu looking candle. The high and the low can be significant. We only got back into that range on these two candles, and we've been below it since with the bearish gap and go here. So it's pretty significant if we do get back up into that range, but I think there will be quite a bit more selling. The other issue, or not issue, but if we do push up a little bit more, we're starting to contend with some of these pivots on the way down. So the shorter term pivots, we're starting to get back into those, and then it's a question, how high can we get? We obviously cannot take out this pivot and still be in this downtrend, and I think we're staying in this downtrend. At least that's what I think. And so if we stay at the 200, that's a nice level. We've rejected that a couple of times. Makes sense if we push through it this time and then roll back down, just because people will be shorting at the 200. So what better way to trap them would be to keep going up further past it. I don't know how much momentum it'll have to keep going further past it, but we do have the open and or the high of that bear candle to contend with if we do get back up to 4,200. So I think, and I said this I think during yesterday's video, these larger candles, they're really good places to retest into. Well, this one, or retest in the middle. So this one, we already got into that, and then we're just sitting here. We've paused here for 3 days. We're in the middle of that candle. So this is a stair step. This is just resting. We could totally go up further So what if we do get up further and retest into the middle of this candle? That's nearly what happened this day. Got almost back up into that. That was running out of steam with 4 bull candles in a row, and then gap, bearish gap and go, gap right down near the 100, and then collapsed, and we've been lower. We've still been lower since that open. So if we could retest into the midpoint of this, that'd be around 41.25. So I'm thinking anywhere in here is about how far we'll go up. And if we do get there, I think there'll be more reasons to short it from here than to go long from here. And then this is still enough below this pivot that's our larger time frame of lower highs and lower lows, that really we need to stay below if we're going to continue to be in this kind of a downtrend recession sort of market. So let's say we get to there. It's not as far, from that one to then, that one. But the step down from these, I'd have to measure that to see. So this would be the biggest one. And then, this is a question, if that one's the next, or if we were, let's say reverse right here, that's going to be around the same as this one, but there's no sense in measuring those right now until we actually get another pivot. But that's what I'm anticipating, is come up a little bit more, look like we could come back and do some sort of double top, bounce around through these, and eventually take out a low, just like we've done each of the other times. But then I don't know how far it'll go that next one. Probably into the way these have worked out time-wise. So this was January, March, August. Could happen November or December, to get up into here. With holidays ahead, it makes sense that if we do some more sideways, then push up, bounce around the 200 here, have some sort of Santa Claus rally into, like, what if we do this into like that time frame around Christmas, and then in January roll over. I don't know. I'm just speculating. We'll see what we end up doing, but yeah. Hope this helps. This is Justin. Thanks.